I know that's kind of an odd picture to have there, but I just want to ask you, look at those tomatoes really carefully. Do you ever feel like the market does that to you some days? Just like that, stepping in and out of your trades. Hi there, this is Anne Marie. I just had to find something to get chopped up. I just thought that tomato was the perfect example of what maybe happens to our fingers when we get chopped up in the market. And we all have, especially for day traders, right? So this, although it applies on grand schemes as well, who I'm really addressing is the day trader, or someone who wants to be a day trader and attempts day trading. Here's the thing. When we day trade, a lot of times we use lagging indicators, and those lagging indicators really hurt us because they lag, and then by the time we get in, because we're sitting around going, wow, do I get in? Most all of the profit is gone from the trade. There's a way to avoid that. We can't totally avoid market chop, and we can't totally avoid getting chopped up. But what we can do is use a technique that allows us to identify critical places in price levels. Now, as I tell all the people that work with me, price does not stop arbitrarily. It really does not. It's actually defined by all the algorithms and the billions of dollars moving in and out of it during the course of the day, or hundreds of millions or millions, whatever size. I do not trade stocks that have volume less than 500,000, and I don't normally trade stocks that cost less than $5. And the reason I don't is because those stocks can be very easily manipulated, and because I do spend a lot of time with the Fibonacci, all I work on is these price levels and where they're going. And if a stock can be easily manipulated, then it's going to break Fibonacci rules, and then, you know, my Fibonacci doesn't work. So that's why I don't use them. So here's something very important that you can do. When your stock opens, and I have this on a 1-minute chart so that you can see the little choppy pieces. When your stock opens, wait until a candle completes and then draw a line across the high and then a line across the low, which I did right here. It's these two. What I recommend is let the first 2 5-minute candles complete before you decide whether you're going to get in a trade or not. Now, a 2-minute candle, I mean, 2 5-minute candles are going to be 10 of these guys, right? So that's a lot of time if you're the kind of person that goes, no, I don't want to do that. So that being said, it's completely up to you. For me, because of exuberant buying and selling, I do not trade at the start of the day unless I am fading a gap. And then there are all kinds of rules about that. We're not going to talk about that. So you identify the high and the low, and then you see which one gets broken. If this one gets broken, then go to the next level and draw another line where that is. And although this one is drawn quite poorly, meaning I'm a few pennies off, then yeah, I'm about 18 pennies off. Then what you now have are 3 levels that a stock is moving in. Now, your goal is to make trades only at the top and bottom of these levels, not in between them. In between them is where you get chopped up, right? You get really chopped up in between them. Now, here's why I do not trade the 1-minute timeline. As we move along here, let's say we're just looking at these first 2. As we move along here, this one, oh wow, that really changed scope. Look at that. All right, so our goal now is to trade long at the bottom of this one because it seems to be holding, and to close it as close as we can get to the top. That's fair enough. If we take a trade in the middle here, where are we going and how much space do we have, really? And how secure are you going to be if you're up here and you've got a ton of shares, and what, 47 cents away is where the next stop is, right? 47 cents is a big spread day trading during the day, in my opinion. especially on a 1 minute, right? So trade at the top and bottom ends. Now over here, this is a really choppy 1 minute chart. That's why I don't like to trade these. Let's go to the 5 minutes, see how it cleans up. All right. Okay, I'm running a long time already. All right, so here's what we're gonna do. We're only gonna trade at the top and the bottom of these. Guess what? On the bottom of this one, it fails. Now, if it fails and your moving averages are flat, then it probably is going to chop around. But if it fails and your moving averages start to fail or move negative with it, then you've got yourself a shorting opportunity. And look at the shorting opportunity they had. This morning, our folks got really, really good spread. I only got 6 points. Somebody else got 8.5. So that was a very, very good trade. Now, we come all the way down here, and then we have a new level. I don't like using danglies like that. I'm going to use the close. That's just what I do. You can do it down here too, because that price matters, but I'm just not using it right there. So now I have this level, that's the low, and we're creeping back up. So our goal here is first to determine, is it going to move up and then rotate downward? And if so, can we get in the trade? The next level that I see is the break of this candle right here where it starts to roll over. Wherever it starts to roll over, you're going to draw another line, right? Anytime a big move happens like this and we begin a reversal, do not jump into the trade until it's telling you where it's going, unless you're doing a counter trend trade. If you're doing a counter trend trade, knock yourself out. But in a trend trade, which is what we do most of the time, trend trading, we have to determine what direction it's going in. So here we go up, and it starts rolling over right about here, so we're going to draw a line right there, and we're going to see what happens. Now again, here's always the rule. We've got two lines here. You're only trading at the top or at the bottom. Don't trade in the middle. You're going to get chopped up because you don't know where you're going, right? You don't really know if the stock's going to go up. You don't really know if the stock's going to go down. You could use a moving average that's like a 5-period moving average, but then again, why give yourself more chance not to succeed by moving in the middle of this channel? So don't. Identify your channels and move at the bottom or the top. If you're at the top here and it's a downtrending stock, guess what? Time to short. If you're here and it's an uptrending stock, guess what? Time to go long. All right? It's as simple as that. I don't mean to be sarcastic, but what I want to tell you is this. When we get chopped up, and listen, I get chopped up plenty of times, okay? But I get chopped up because I don't follow the rules. Trading is a simple, rules-based game. The problem is the rules change often, but many of them stay the same. The next problem is that the real rules are often hidden from those like us who are regular retail traders. So my story today is when you day trade and you feel like you're getting yourself chopped up, sit back and say, wait a second, have I identified the day's price levels? And am I moving at the bottoms and the tops of those levels? Okay? Happy trading.